Okay, so everybody wants to make money on the stock market, right? I mean, who doesn't? But you're listening to this because you don't just want theory. You want to know how someone actually did it. Am I right?
You got it.
Well, that's exactly what this deep dive is about. We're going to be exploring how this guy, Nicholas Darvis, made $2 million in the stock market, get this, back in the 1950s. Like, no internet, no fancy algorithms,
Yeah.
just cables, charts, discipline, a whole lot of discipline.
You said it. It's remarkable how he did it. I mean, the guy was a dancer, and he figured out how to navigate Wall Street and come out on top. That's what makes his story so compelling, you
I think,
know?
yeah, it's like a movie or something, right? But here's the thing. It wasn't all, champagne and roses for Darvis. He made a lot of mistakes early on, learned some tough lessons, and that's what we're going to uncover here. We'll trace how he went from knowing nothing about the stock market to becoming like, well, a wizard.
Right. And what people might find surprising is that some of the stuff he learned is actually pretty simple. And it can be applied to, well, really anybody, no matter what you do.
Exactly. It's all about mindset, discipline, and learning from mistakes.
Yeah, absolutely.
So let's go back to the beginning. Back in 1952, in Toronto, Darvis gets stock as payment for a dancing gig.
Mm.
Now, this guy, he doesn't know anything about stocks, but he thinks, what the heck, right?
Right.
Ends up making about $8,000 profit from that.
Beginner's luck, huh?
Right. Total beginner's luck. But that was like a spark for him. It got him interested in the market. Of course, his first approach, let's just say it wasn't, super strategic.
Well, yeah, no kidding.
I mean, he was basically taking tips from anyone who would give him advice. Like, literally, he's getting stock picks from people he meets in nightclubs. Can you believe that?
Wow.
He would buy into companies he didn't know anything about and forget about basic things like brokers' commissions and taxes.
Well, I guess this is a good time to talk about that first big lesson, right?
Yeah.
Don't just blindly follow what other people are saying.
Right.
Even if it sounds really good. I mean, do your own research. Understand what you're actually investing in. Don't let your emotions take over.
Yeah, that's so easy to do, right? I mean, when you hear these stories of people making quick profits, it's really easy to get caught up in that hype.
Oh, absolutely.
And, Darvis, he fell into another trap. Like, he got emotionally attached to some stocks, so he'd hold on to them even when, well, they weren't doing so well.
Oh, yeah. The old keeping pets mistake. We've all been there, right? I mean, you want to believe that stock's going to come back.
Yeah.
But sometimes you just got to cut your losses and move on.
Yep. Sometimes hope isn't a good strategy.
Exactly.
So Darvis is making these classic rookie mistakes, but he's also starting to realize, okay, I need a more systematic way of doing this.
Yeah.
So he shifts his focus over to the New York Stock Exchange. He figures, that's where the big money is.
Sure, sure.
But even on Wall Street, his early trades were still kind of all over the place, right?
Oh, yeah. Like, remember Kaiser Aluminum? He jumped in and out, trying to time the market perfectly.
Mm-hmm.
I bet he missed out on some big profits doing that.
Yeah, he was trying to dance with the market, but he kept stepping on its toes.
Uh-huh. Right. And of course, the market can stay irrational for a long, long time.
Longer than you can stay solvent, right?
Absolutely.
So he's learning about emotional trading the hard way.
Definitely. And that's really a key takeaway for anyone listening, right? You got to have a strategy. You got to figure out how much risk you can handle.
Mm-hmm.
And you got to keep those emotions in check.
Oh, for sure. Emotions can really mess things up. He also tried to outsmart the market, went into the over-the-counter market, thought he'd find some hidden gems, but, back then it wasn't like the big exchanges.
No, not at all.
Liquidity was a problem, and he quickly figured out, okay, this isn't the right place for me.
Yeah. I think this shows how important it is to know the different markets. Like, you got to pick the one that fits your goals, how much risk you're willing to take, and the over-the-counter market, that's a whole other beast. It's risky.
Yeah. And then there were the Wall Street rumors, right?
Oh, yeah.
He bought into Baldwin Lima Hamilton, based on this tip about some big atomic train order. Turned out to be just hot air.
Those rumors.
And then there was Sterling Precision, which was supposedly going to be acquired.
Right.
Another bust.
So this brings up a problem that's even worse today with the internet and all. I mean, how do you know it's true?
Yeah, it's hard to filter out all that noise. How do you make good decisions when there's so much information out there?
That's the million-dollar question.
It really is. And, well, Darvis learned the hard way. He took some big losses, especially one in a company called Jones and Laughlin. But, these losses, they were actually kind of a turning point for him. He had to step back and rethink everything.
He had been relying on fundamentals,
Right.
like looking at company reports and stuff.
Exactly. Trying to figure out how much a company was really worth. But that wasn't working for him. He needed a whole new approach.
And that's when he discovered technical analysis.
Right. But we'll have to save that story for part 2.
Stay tuned. So, last time, we left off with Darvis kind of hitting a wall. His whole fundamental analysis thing wasn't working.
Yeah, he needed like a whole new perspective, right?
Exactly.
Yeah.
And that's when he gets this, well, almost desperate idea. He sees this stock, Texas Gulf Producing, and it's just been climbing steadily.
Okay.
And he buys it. Not because of any, deep analysis of the company, purely because of, well, how the price is acting.
So he's basically ignoring everything he thought he knew about investing.
Pretty much. He's just going by what the charts are telling him.
And does it work?
It does. The stock keeps going up, and Darvis makes a nice profit. This is like a huge moment for him. It opens his eyes to technical analysis. The idea that, hey, you can actually predict, future price moves by looking at past patterns.
So it's like he's discovered this secret language or something.
Yeah, kind of. A way of figuring out what the market's going to do. And that's where his famous box theory comes in.
Ah, the boxes.
Right. So Darvis starts to see that stocks often move within these price ranges. He calls them boxes. And he would watch for a stock to break out of the box. That was his signal.
But isn't that like
Yeah.
gambling? I mean, predicting the future based on lines on a chart?
A lot of people think that, but it's not really about, knowing for sure what's going to happen. It's more like understanding the odds, seeing patterns that make a stock more likely to go up or down.
So it's calculated risk.
Right. And he wasn't just blindly following the charts either. He was looking for strong industries, companies with good fundamentals.
Okay, so the charts were like a tool.
Yeah. A tool to help him find good companies. And then remember, he's a dancer. He's got to go on this world tour.
Right. No laptops, no smartphones back then.
Nope. Just him, his charts, and a ton of cablegrams.
That's crazy. I mean, you'd think that would be a disadvantage, right?
You'd think so, but it was actually a good thing. Being far away from Wall Street, with all its rumors and noise, it helped him stay disciplined.
He wasn't getting caught up in all that frenzy.
Exactly.
No.
He had to focus on the price action, on his own analysis. He'd get these cablegrams, just the stock quotes, and he'd carefully plot them out.
It's amazing he could do so well with such limited information.
It is. It shows you how important it is to just focus on the essentials, tune out all that other stuff. And being away also helped him with something else, emotional attachment.
He couldn't just like run to his broker and make a rash trade.
Nope. He had to plan everything out, stick to his system.
So that distance actually forced him to be more disciplined.
It did. And that's when his box theory really starts to develop. He adds in other things like volume to help him confirm the signals he's seeing. He gets even more disciplined with his entries and exits.
Buying low, selling high, the classic stuff.
Yeah, and he also starts using stop-loss orders. It's basically a price where you automatically sell a stock if it starts going down. It helps protect your profits and, keep you from losing too much.
That's so important, isn't it? Managing risk.
Absolutely. It's just as important as finding those winning trades. A lot of people forget that. But Darvis, he understood it. And then comes a big test, the 1957 market downturn.
Uh-oh.
This was a tough time for a lot of investors. But Darvis, he was actually okay because of his stop losses. He got out of those losing positions quickly.
So he was prepared? He wasn't panicking.
Right. And this just made him believe in technical analysis even more. He saw how emotions can really mess you up and how having a disciplined approach, one based on data, can help you get through those tough times.
The market goes up, it goes down.
Exactly. You got to have a plan for when things go bad.
Yeah.
And Darvis did. He didn't try to fight the market, he just followed his system, protected his money, and waited for the right time to get back in. And then, this is really interesting, he starts to shift gears. He's not just trading stocks anymore. He's actively looking for those companies that are going to explode in value.
So he's looking for growth.
Big time.
Yeah.
He calls it techno-fundamentalist investing. He still cares about the fundamentals, but he's looking beyond the usual stuff, He wants companies that are disrupting industries, innovating, companies that are poised for huge growth.
He's like a growth investor before growth investing was even a thing.
Right, and he was willing to pay more for these companies. He knew that their future potential was worth it.
So not just looking for cheap stocks.
Nope. He understood that sometimes the best opportunities are in companies that are already doing well, but have the potential to do even better.
He called them expensive but cheap stocks.
Yeah. And he was really thorough in his research, reading everything he could, talking to experts. He wanted to understand the big trends, the innovations that were going to shape the future.
So he wasn't just reading charts. He was trying to understand the whole picture.
Exactly. And this new approach, it led him to some of his biggest wins, like Lorillard, the tobacco company.
Okay.
He saw they were innovating, coming out with filter cigarettes, which were becoming really popular. He combined that with his technical analysis, saw a breakout from a box formation, and rode that stock to a big profit.
Nice.
And it wasn't just a fluke. He did the same thing with other companies like Diners Club.
Which was?
They were all about credit cards,
Right.
a brand new industry back then. And remember, he's still super disciplined, using his stop losses, protecting his profits. Like with Diners Club, his stop loss saved him when the stock went down.
Smart.
Yeah, very smart. It's like he's dancing with the market, he's anticipating the moves, adapting, getting better all the time. And his profits are adding up. He's getting closer to that $1 million goal.
But it wasn't all easy, right? I mean, he still had doubts, fears.
Oh, sure. But he had this system now, this set of rules to help him stay on track.
So he was mastering not just the market, but himself.
Exactly. And that's a lesson that's even bigger than, any trading technique. To succeed, you have to know yourself, be disciplined, and control your emotions.
Yeah. Your own mind can be your worst enemy.
It can. And Darvis's story proves that. But we're not done yet. We'll talk about his biggest triumph and the final lessons he learned in the last part of our deep dive.
So Darvis, he's doing great, making tons of money. But like you said, there are always more twists and turns, right?
Right. And this is where we see maybe the biggest lesson of all. Darvis, he's a millionaire now, and he goes back to New York, back to Wall Street. And almost right away, he hits a snag.
Really, after all that, after all that discipline and figuring out his strategy.
It's a good reminder,
Yeah.
being back in that environment. The rumors, the constant information overload, it was just too much.
Yeah, I can see how that would happen.
He got off track, started making those impulsive trades again, and, well,
He lost money.
yeah, enough to make him realize that being near Wall Street, all that energy, it was actually hurting his trading.
That's so interesting, right? You'd think being close to the action would be a good thing.
You would. But for Darvis, it was the opposite.
So what did he do? Like, give up on Wall Street completely?
He did something even more, radical. He went back to what had worked before. Remember, he had to trade from a distance because of his dancing career.
Right.
He basically recreated that.
Mm.
Went to Paris, got away from all that noise.
Back to those cablegrams, huh?
Yep. Back to
Yeah.
basics. He went back to those rules he had set for himself. And this is where you see the power of his system. It wasn't just about picking stocks. It was about having a framework, a process he could follow.
So no matter where he was, no matter how he felt.
He had a way to make good decisions. It was like a safety net,
Mm.
to protect him from his own bad instincts.
I love that, a safety net.
And he actually made his rules even stricter. Spread his trading out among different brokers, told them, don't even talk to me.
Wow.
Just those cablegrams.
Yes.
Just the data, no opinions. Can you imagine that today? With everything being so instant.
No way. I'd be checking my phone every 5 seconds.
Right. But Darvis, he knew himself. He knew he needed that structure. It was like he was designing a system to make him a better trader.
And it worked. He got back on track.
Oh, yeah. He started making money again. He got even better at finding those growth stocks, the expensive but cheap ones.
Mm-hmm.
Always using those pilot buys, carefully trailing his stop loss.
So strategic.
He was like a chess player,
Yeah.
always thinking a few steps ahead. And in the end, he reached his goal, $2 million.
That's amazing.
It is. But this time, it was different. He wasn't, super excited. He understood that the market can change quickly and that you always have to be learning, be disciplined.
He didn't just beat the market, he beat himself.
That's a great way to put it. And it's something we can all learn from, right? Whether it's investing or anything else.
So, big picture. What are the big lessons from Darvis?
Well, first, have a system, a set of rules to help you make decisions. It could be for investing, your business, anything. A process helps you stay on track, make better choices.
Take the emotion out of it, right?
Exactly. And second, discipline. Stick to your plan. Don't get distracted.
Easier said than done, I think.
Oh, absolutely. But Darvis shows us it's possible. And finally, never stop learning. The market changes. Everything changes.
Growth.
You got to keep up.
Always be a student.
Right.
So that's the story of Nicholas Darvis, a dancer who took on Wall Street and won.
It's a reminder that we can achieve amazing things if we have the right mindset, the right tools.
Absolutely. Well, that's it for our deep dive into Nicholas Darvis. What a story, huh?
Amazing story.
Who knows? Maybe one of you listening will be the next Darvis. Until then, happy investing.